Laboratory Group Assignment Online Presentation 01, submitted by Jonathan Lekigan, Gayuchan. Requirement 1. Create a cash management system, define each process and functions. Requirement number 2. Create a capital structure based on the last project individual presentation 3. Choose one company and present. Create each Excel sheet and PowerPoint presentation. Before we start with the functions in cash management system, let us define first what is cash management system. This is a system that ensures the best practice in operation and management of company's funds and treasury activities in order to monitor the cash needs of the company, and the formulation and implementation of a cash strategy that ensures sufficient cash resources are always available to meet the company's disbursement requirements. There are at least 5 objectives of cash management system. First, safeguard funds under any economic cycle. This means that funds should always be available whether the economy is under recession or whether at its peak. The second objective is proper fund appropriation to finance long-term investments. These are related to investments in capital assets or investments in joint ventures, investment in foreign businesses, and the likes. Third objective is monitoring and control of cash inflows and outflows. When we say cash inflows, we are monitoring and expecting that cash would be coming on time as planned, and cash outflows are being planned ahead of time, that there are due dates already established for the cash outflow and the outflows are properly approved. The fourth objective is the maintenance of appropriate level of cash on a daily basis. Now, the company doesn't want any day that there would be a shortage in cash because there would be a delay in the processes. The fifth objective is to invest any excess or idle cash on marketable securities. This is for the company to earn money while the cash is not being utilized. Let's discuss now the functions in cash management system. At the core of this illustration is the cash management system. Surrounding this system are the different functions, namely treasury, payroll, accounts receivable, accounts payable, petty cash, reconciliation, and it boils down to the general ledger, or it is reflected in the GL. In this system, the monitoring process is under the finance management and being supported by information technology and internal audit. Now let's dig one by one these different functions. The first function is the treasury. This section manages the liquidity of a business where all current and projected cash inflows and outflows must be monitored to ensure that there is sufficient cash to fund company operations, as well as to ensure that excess fund is properly invested. There are several processes involved in this function. First is to prepare proper actual cash reporting on a daily basis in order to achieve the number 2, to determine the surplus and excess cash of the company. And for number 3, in order for the excess cash amount to be used to invest in short-term marketable securities or to pay outstanding loans of the company. Fourth function, process, is evaluate financing options and selecting the most appropriate one. For example, if the company is investing in capital expenditures, then the company must determine the financing options that are available to finance that investment, like for example, loans or internal generated funds. Fifth is to ensure that the company's credit facilities are sourced from banks offering the best rates. Of course, the company must establish a relationship with the banks in order for the company to be able to get discounted rates for the loans. Sixth process is to minimize the commission paid on bank overdrafts by arranging or sweeping facilities with banks. The seventh is to manage and optimize the currency exposure and costs for the company. Of course, there should be someone who is in charge for the forex in order to avoid any losses, meaning to determine when is the best time to pay for the liabilities and to transfer the other currencies denominated to the functioning currency of the company. The last one is to prepare on a regular basis a cash flow forecast analysis covering at least 6 months in order for the finance manager to be able to determine the best plan in advance. The second function is the accounts receivable. This section manages the collection of the company and match with the proper invoices while ensuring the records of the company is also matching with the records of the customers. Processes under accounts receivable. First, ensure that all necessary information and approvals are taken before a new customer is registered in the system. Example, credit forms that are fully signed and approved. Second is the TIN certificate. The third is business permit certificate, company profiles, and other related documents. 2. The access of accounts receivable records should be restricted and secured in order to prevent the risk of misappropriation of collections and fraudulent cancellation of invoices with delivered goods and services. Third, company guidelines shall be followed regarding collection of all outstanding and due accounts receivable. The fourth process, the credit period and credit limit shall not exceed the credit forms approved by the sales manager or the management or the board of directors for the individual customers. Fifth, any customers exceeding the credit terms shall put the account on hold. Number 6. If a customer is unwilling or unable to pay their outstanding balances, the sales department shall consider placing the customer's account with the management and or legal department of the company if necessary. Number 7. Ensure that collections are properly matched to the invoices. Number 8. Prepares a regular customer balance confirmation to ensure that all reconciliation items are reviewed and corrected. Number 9. Prepares monthly aging reports necessary for monitoring and necessary action to be undertaken by the sales in charge. And number 10. Sales has the overall collection responsibility for all the company's accounts receivable, being the negotiator at the inception of sales. Accounts receivable or credit team shall conduct only the follow-ups. The third function is the accounts payable. This section manages the payment process for due payable transactions of the company with proper supporting documents. The processes involved: first, ensures that all necessary information approvals are taken before a new vendor is registered in the system. For example, vendor's accreditation form, the company profile, the TIN number, the business permits, and others. Second, the access to accounts payable records, whether it is online or hard copy, shall be restricted and secured in order to prevent the risk of fraudulent payments by unauthorized people. Third, any payments are properly authorized as per authority metrics of the company. Fourth, proper internal controls shall always be followed and in accordance with the accounting policies and procedures to ensure that only valid and authorized payables are being paid. Fifth, the in-charge shall pay all its accounts payable on their due dates in order to maintain the company's credit standing and reputation. 6. All transactions recognized as liability or accounts payable shall be recorded based on the approved source document, such as the supplier's invoice, and adequately supported by the required supporting documents such as purchase orders, receiving reports, etc. Number 7. Prepares a regular vendor balance confirmation to ensure that all reconciliations of balances are reviewed and corrected too. Number 8. Accounts payable aging list shall be generated on a monthly basis and reviewed. The fourth function of CMS is the payroll. This section is related to the management of payments of employee salaries and other benefits on a timely manner. The processes involved: first, the access to payroll files are strictly confidential to avoid misunderstandings between employees and management. Second, Payroll files shall be properly approved as per the authority metrics of the company. Third, proper internal controls shall always be followed and in accordance with accounting policies and procedures to ensure that payroll are valid and recorded properly. Fourth, payroll system review shall be conducted regularly to make sure that it is linked properly with the appropriate ledgers and to avoid duplicate payments to the employees. Fifth, ensures that resigned employees are properly frozen in the system to avoid payments of salaries. Number 7, proper segregation of duties involves separate person in charge for the customization of the payroll system, the transaction entry, approval, and payment. The fifth function in the CMS is the petty cash fund. This is related to the management of small transactions, ensuring that approved documents or disbursement vouchers are being paid through petty cash fund. The processes involved: first, any cash disbursements are properly authorized as per the authority metrics of the company before payment. Second, ensures that supporting documents are complete, reviewed, and approved. Third, established maximum level of expenditures shall be observed for proper and timely replenishment of the fund. Fourth, the cash vault shall be the responsibility of the petty cash custodian and the keys shall always be properly secured. Fifth, in case of turnover of fund, necessary replacement of vault or passwords shall be taken into consideration to avoid theft. Number 6. Proper segregation of duties, approval of vouchers, transaction entry, and custodian of cash shall be done by different individuals. The sixth function in the cash management system is the cash reconciliation. This is the part of the segregation of duties that ensures that all cash transactions recorded in the system are matching with the bank statements. Processes involved: first, validates that all cash transactions as reflected in the bank statements are properly recorded in the system. Second, ensures that bank debits are matching with the system transactions. Third, monitors that all outstanding collections not reflected in the bank statement at month end are cleared in the early days of the succeeding bank statement. Fourth, monitors that all outstanding payments that are not yet deducted in the bank shall be cleared in the early days of the succeeding bank statement. Fifth, ensures that any book errors like duplicate entries, transposition errors, and others are properly recorded or corrected before closing the month. And sixth, ensures that the finance manager shall be notified in case of material errors and bank errors for necessary corrective actions. The seventh function in the CMS is the general ledger. This is where all transactions are ensured to be posted in the books of the company on the appropriate time. The processes are as follows. The in charge of the function ensures that all transactions are cleared before closing the monthly books. Second, notifies the accounts receivable team if there are collections that are not yet matched on the customer's accounts or advance collections that are not yet matched with the new invoices. Third, notifies any error or uncleared balances in the accounts payable subledger for advance payments that are not yet cleared with vendor balances. Fourth, ensures that cash balances as reflected in the GL is the correct cash of the company to be declared for a monthly report. The cash management system of the company will not function properly without the monitoring and support system. There are three major roles that are involved in this process. First is the finance management or finance controllership. The in charge of this function has the overall responsibility of the cash management system. He ensures that all cash transactions are in accordance with the established policies and procedures of the company. He or she always monitors the cash flows of the company, ensuring the availability of cash. The person in charge also takes care of the excess cash, making sure that they are properly managed and any opportunity for short-term investments are taken into consideration. The in-charge also maintains the trust and reliable relationship between the company and the company bank executives to make sure that the necessary financial needs are always available at an established and advantageous borrowing rates for the company. The second major role in the monitoring and support for the cash management system is the financial information system. This involves the ERP system that is functioning well in accordance with the company's policies and procedures. The in charge of the system is also have to make sure that authorized individuals are the only ones that are allowed to access system modules. All reports such as customer and vendor balances of accounts, aging of transactions, bank statements are generated properly by the system. The in charge of the system also shall help to make sure that commands for the freezing holding accounts of customers, vendors, employees, and other ledgers are properly being executed or implemented. And the system shall maintain a balanced debit and credit transactions at all times. The role of this financial information system is very critical in the success of the cash management system. The third major function in the monitoring and then support system for the cash management system to function properly is the internal control. The responsibilities of the people in charge for the internal control are as follows. First, regular conduct of audit testing to ensure that all cash operations are in accordance with the policies and procedures. Second, prepares a regular report with the risk level on it with necessary corrective actions also to be implemented by the management to improve the cash management system. Third, conducts testing of credit limits and credit terms for few customers to ensure that the established limits in the ERP system is functioning as evidenced by the total figures entered by employees. Fourth, conducts testing of overdue receivables to record and to make sure that necessary actions are being raised to the responsible individuals or to the management if there are any errors or fraudulent transactions. Conducts testing of payable by taking the aging of dues and advances to vendors to record and ensure that all errors on payments are in accordance with the policies and any corrective actions shall be recommended to the management. Number 7. Conducts surprise petty cash counts in order to ensure that cash on hand are not misappropriated by the custodian. And lastly, conducts testing of payroll by taking HR records and matching with the payroll system. Any audit findings shall be reported and corrective actions are recommended and monitored for the corrective actions to be done by the management. The next part of our discussion is the capital structure. But before we move on, we have to define first what is all about capital structure. In corporate finance, this is simply the combination of debts or liabilities, equities, hybrid securities to finance the assets of the company. Let's take, for example, the AT&T Incorporated. The capital structure summary is shown on the graph. Since 2016 up to 2019, with the projection of 2020 and 2021, we can say that the company is highly leveraged, as the mere fact that the assets that is colored in blue is financed mostly by this color orange, or the total liabilities, and which is being financed low by the equity or the internally generated funds of the company. Let's go into details of the capital structure. First breakdown is the short-term liabilities. These are composed of current liabilities such as accounts payable, accruals, short-term loans to finance the current operations of the company. Second, other long-term liabilities. These are long-term liabilities other than bonds, like long-term corporate bank loans to finance the company's long-term obligations or investments. Third is the bonds. These are also long-term liabilities that are fixed income instruments that represents indebtedness of the bond issuer, the company, to the holder, which is the investors. Fourth, The paid up capital. These are composed of the capital and the additional paid-in capital, composed of cash or other assets that the shareholders have given to the corporation in exchange of stocks at par value plus any amount in excess of the par value of the stocks. The fifth breakdown of the capital structure is the retained earnings. These are accumulated profits from previous years of the corporation that is retained at a particular point in time. This can be unrestricted or restricted for particular purpose such as sinking fund to pay liabilities in the future, or fund for expansion of the company, funds for dividends, and other similar appropriations. Let's go into the breakdown of the AT&T Incorporated capital structure. If we can see here, and from 2016 up to the forecast of 2021, we can say here that the bulk of the structure is being composed of these other long-term liabilities, which we can say that it is a stable company also because the applicable capital structure is matching with the company's goals and objectives. The bonds here are being financed in a low portion, which is, I believe, that it should not be the proper way, because bonds can be, there are a lot of benefits in having a bonds other than paying other long-term liabilities with fixed interest charges that are huge. Let's go into the financial position where we took this data. We can see here the total assets is should be matching with the total liabilities and equity. From 2016 to 2021, even though the figures are being is increasing as time goes by, with the 2020 and 2021 at par level because of the pandemic period, we can also trace that based on the calculations that we had made a while ago, like for example the breakdown of the capital structure, it is still at the same level, meaning the company is maintaining the appropriate level of or established procedures or established capital structure for the company as time goes by. And if it is if the company is gaining a profit from this capital structure, then there's no way that we should be changing this policy if there are no benefits. The next part of the discussion is to illustrate the financial ratios that are involved in the capital structure. First is the liquidity ratios, wherein the current liabilities are always involved. Here we can see here the current ratio, which is taken by dividing the current assets over the current liabilities. We can see here that since 2016, it is on the same range up to the 2021 projection. Even for the quick ratio, we can say here that the company is maintaining a certain level of ratios that they should be able to maintain over the years in order to maximize the profitability of the company. For cash ratios, they are maintaining low cash as compared to current liabilities, but if it is working properly, then it is still fine. But for 2017, we can see here that there is a better liquidity time of the company, because as compared with the other periods, the current ratios, quick ratios, and the cash balances are high. Or maybe we can see here that by year end, maybe there is some huge collection making this huge cash that is available in the books of the company. Let's move now to the leverage ratios. The first one is the debt to equity ratio, wherein we are dividing total debt with the total equity to determine how big is the total debt as compared to the equity. Now from 2016 to 2021, we can see here that the 2016 and 2017 is different from the range of 2018 and the projection for 2021. This means to say that by 2017 or 2016, there is a change in the policy wherein the company shall retain some portions of the equity or the accumulated profit in order to accumulate for unrestricted purposes rather than taking a lot of debts to finance any projects. Now, the next ratio is the debt to total assets. By dividing total debts with the total assets, we can see here that from 2016 to 2021 it has the same range, which means to say, as compared to the debt to equity ratio, this means to say that despite the increase in the debt of the company, the assets are also increasing at a higher pace than the debt, meaning to say that it is showing that the company is improving in its internally generated funds to finance its assets. The third leverage ratio is the total capitalization ratio, wherein it is taken by dividing total debt with the long-term debts plus equity. Now, with the decline in the total capitalization ratio in 2018 and 2019, from the range of 2016 and 2017, this shows that the company is either limiting the distribution of income to or distribution of dividends to equity holders without regards to how high the income generated in order for the company to be retained in the company to finance any future operations of the company. And from 2018 up to 2021, it is at the same range. Regarding the interest coverage ratio, we are dividing the EBIT over the interest expense in order to know the capability of the company to pay the interests. Now, from 2016 to 2021, we can see here that in 2016, it is high, very high capability. That's why the company might have decided to make it a lower, maximize the profits of the company. With the slight increase in the interest coverage in 2019, which is still below the 2016 and 2017 ratios, and with the increasing trends in the interest expense, this indicates that the company is using its debts efficiently together with the increase in the internal sources of financing, as discussed above, to generate more profits for the company. That's all for the case study, and thank you very much.